So welcome everybody. My name is Alexandre Kech. I'm the CEO of Onchain Custodian. Onchain Custodian is a digital asset custody service in Singapore. I will present a bit more about our company at the end of this presentation. The purpose of today's info session is to explain why we believe that third-party custody is critical to the success and the sustainability of the crypto and digital asset industry. This initiative, this info session, is part of a virtual exhibition booth that we set up on our social media to ensure that we can engage with our prospects and clients and partners in a situation, as we all know, where everybody is working from home. The topic of today will be the critical importance of third-party custody for the survival of crypto, and we're going to start now. So this is what the future will look like. For those who believe in digital assets, we believe that, and we strongly think that it will become a reality in the 5 to 10 years to come, that fiat money, equities, fixed income, gold, real estate investments, fine art investment, wine, anything that has a value will be tokenized on multiple blockchains that will become over time interoperable. This tokenization of value will lead to tokenized assets, such as the one you can see on the screen, like JP Morgan coins or US dollar stable coins, or the cryptocurrencies that you all know, like Bitcoin, for example, Litecoin and others, that will be usable by families, individuals, and corporates to do business. They will either decide to hold those assets directly themselves on computers, hardware devices, their phones, software wallets, or they will outsource that activity of safekeeping those assets to digital banks, such as Onchain Custodian and others. And they will be able, with this type of assets, to do really anything they do today with fiat money. Buy their groceries, get a loan to buy a house, invest, buy a plane ticket, and why not pay their taxes. We believe in that future because the numbers are there. We believe that by 2025 or 2030, it's very difficult to understand how quickly this will come. Most financial transactions will be expressed as programmable digital assets, which means that tokenization of assets and value will take place, and it will surpass the transactions volumes in legacy formats. There are some studies that is pointing in the same direction, such as the OECD studies on tokenization. Even the IMF have done some studies looking at having trillions of assets tokenized in the future. And we can see in our industry, of the crypto industry, that the AUM of crypto is constantly increasing, with ups and downs depending on the economy and the market itself. But what are we talking about when we're talking about digital assets or tokenized assets? There are three types of assets in a gross term. Payment tokens, you can mention native crypto or backed tokens like stable coins or Bitcoin. So Bitcoin is a native cryptocurrency. Stable coins would be a backed token, such as Tether or USDC or PAX. And then you have what we call utility tokens, which are in fact really enabling tokenized crowdfunding. So it's a way of raising funds for a company in exchange of a right to use the service in the future. This was very used and popular in the last 2 to 3 years, and now is a bit less popular due to many issues in how those ICOs, as we were calling them, have been managed. And then you have security and other legal ownership tokens, such as real estate tokens, fine art tokens, gold-backed tokens, or equity tokens, or private equity, for example, representing shares representing on blockchain that are, in our context, digital asset types. But why is it interesting to have native tokens, but also more importantly, how Why is it interesting to have tokenized assets on the blockchain? Well, tokenization of assets really enables to represent a portion of a value of an underlying asset on the blockchain and to trade it and distribute it in a easier and cost-effective way. So by having in a digital form, in the form of a digital asset, fragmentation of ownership is made easier, and whereby today, for example, for corporate bonds or for a real estate investment, it's generally, at least the good investments are generally reserved for institutional players who are able to put minimum of 500,000, 300,000 or millions into the investment because of the fact that these are complex to manage and therefore difficult to further fragment to distribute to smaller investors. Tokenization would enable, through blockchain and smart contracts, to issue fragmented ownership of investments such as corporate bonds or real estate, to take my example, and to make it available to a wider range of investors. That's the promise of tokenization, making very good investments available to the mass and doing that very efficiently through the blockchains and the smart contracts that goes with the distribution of those assets, and therefore creating a liquidity through secondary markets of those assets once they've been issued. The problem with blockchain and digital assets is that a digital asset is managed through a public and a private address. So the public address is comparable to an account number where your digital assets are being delivered to, and your private address is comparable to a password that you need to access your digital assets. If you use your private address, or if someone gets hold of your private key or your private address, you are losing your assets. That's what has been happening at the emergence of this crypto industry. Is when you look at the exchanges, number of exchanges or funds that have been either hacked or who have misplaced their assets in the last 5 years, you reach a number, an astronomical number of more than $2 billion worth of assets lost throughout the experience, I would say. And the reason why this is happening is because the way custody is done today, or was done rather, was either every assets holder were keeping the assets on trading platforms, and trading platforms are not focused on custody. They're focused on trading. They're focused on creating liquidity for the market. But they're certainly not investing enough money and time into building the right operational and technological environment for securing these assets. The investors were managing those assets themselves, and there, of course, you can also have issues in the sense that it's not their core business. It's not that trivial to manage private keys, and if you don't do the proper backups and so on and so forth, you can quickly lose your entire investment in Bitcoin or in another token by just losing your hardware devices it's stored on, or by this hardware device being compromised or being lost. As simple as that. Hence the emergence of custody services who are focused on custody. That's their bread and butter. That's what they are built for. That's why they are created for. Reduce the risk in a compliant way, in an insured way of losing assets, but also providing neutrality, transparency of the management of those assets for their customers, and doing that in a cost and an efficient way. So the demand to solve that challenge of hacks, as I shared early on, ensure enterprise-grade secure storage of digital assets, provide a single window access to those assets and those blockchains in an easy, so providing convenience, enable transparency and auditability of investments, and guarantee an independence and neutrality for investors. There are some incremental roles for digital asset custodians, such as managing events. Like in the traditional capital market space, you have corporate actions. Here you would have, for example, forks that needs to be managed, and the investors needs to decide what to do during those forks. For securities token in the future, there will also be corporate actions on those assets that needs to be managed. There are also some tokens that enables staking. That's a service that custodians can also offer. Transaction management and lending and borrowing are services that are typical to the traditional market custody services service providers and can also be replicated in the digital asset space. Finally, providing financial reporting and auditability to funds, for example, that they can share with their underlying investors is something that custodians can do in a neutral way. And in the future, we anticipate that regulatory reporting will also be an important task of custodians. So how do custodians in general hold and safekeep those assets? Multisig cold storage is one of the solutions. I'm going to go through 3 of them today. Most custodians, and Onchain Custodian in particular, would be going through KYC processes, very stringent. We are, like any, in our case, new financial institutions, obliged to go through a proper onboarding of our customers, ensuring that we are also screening transactions against AML and CFT risks, and that we do that in full compliance with our country of domicile regulation. We obviously also would set up some various levels of approval for accessing the accounts of the customers holding assets with us. We would also ask these customers to whitelist the address that you expect to transfer tokens to in the future, and for not only for AML purposes, but also for risk management, cyber risk management purposes. They would be 2-factor, 3-factor authentication mechanism, just to access the platform where those assets are administered. And for the wallets themselves, so the places where those bitcoins, those utility tokens or securities tokens are held, meaning the wallets, these wallets will be segregated with a multi-layer instruction approval and signing process. And in this case, for Multisig cold storage, this is handled through Multisig hardware devices that would have to be introduced, in this case, 3 out of 4, but you could have combination of 2 out of 3, 5 out of 7, whatever you want. So those hardware devices would have to be used one after the other to sign a transaction on the blockchain and release the tokens to the address that the customer wants to send those to. There is also multi-party computation, which is a more recent algorithmic-based or mathematical-based way of securing the signing of transactions, similar to a multisig where the addresses are split across multiple hardware devices. Here, the addresses are sharded and distributed across multiple software devices or software hosting. So the private key, as I mentioned, a private address, the private key that will be used to sign transaction, to access the tokens, the digital assets, will be spread across multiple geographies and technological environments to make sure that these assets are very difficult to, these keys, sorry, are very difficult to steal. You will still have, for example, when there's a need for transaction signing, 3 or 4 or 2, or depending on the setup that you want, 3 of those keys will be reunited algorithmically and through a mathematical formula, and will sign transactions. And what is interesting with this technology is that generally after the signing of the transaction on a regular basis, those keys are reset. It means that if a hacker needs to get a hold of those private keys, he would have to hack multiple geographies and technological environment at the same time, get hold of all the keys, be able to de-encrypt the algorithm used for signing the transactions and do that pretty quickly because those keys are reset on regular basis. This is a good technology, but quite new. So the industry is still there is a debate on whether this is secure enough at this stage to take care of all assets under custody. So some providers will offer that MPC solution to their customers. Some others will prefer to stay on multi-signature, multi-sig hardware devices, and so on and so forth. And finally, and these are slides that I've stolen from IBM, there is this protected memory and HSM solution, which is leverage a very strong technology that has been used by banks for many years, hardware secure modules. For example, all banks connecting to SWIFT are using HSMs, level 2, level 3 certified, depending. And those HSMs are securing and hosting the private keys that will authenticate, in the case of SWIFT, the user. In the case of crypto, the private keys that will be used for signing transactions. Master keys will also be used to encrypt the entire operating module, the operating environment, and will also encrypt, for example, the wallet application and the secure multi-party computation, if you have it as well in that environment, and other databases that can, as well as approver and administrative policies that can be completely and fully protected by a master key stored into an HSM. And on top of that, some solutions go to being only able to access that environment through APIs that are known and not and impossible to alter, making it impossible even for an administrator, an evil administrator in this case, to access the platform and steal those keys, giving access to the assets on the blockchain. So as you can see, there are quite a few ways of securing assets. Technology is evolving every day, and at least Onchain Custodian, we're making sure that our technology is up to date with the latest technology solutions. I will explain how we do that in the second part of the presentation. Okay, so now that I've talked about the role of custodians and how they're protecting the assets of the customers, I want to talk about how the industry is evolving and why is it important that custodians collaborate with one another to build the right ecosystems for the entire industry and for the sustainability of the crypto and digital asset industry. I'm the co-chair of the Global Digital Finance, alongside with Hervé François from ING, and this working group aims at, like all the working groups of the Global Digital Finance, is working on code of conducts. As you might have noticed by reading the press, regulation around cryptocurrencies or digital assets in general, and the service providers of those around those assets, is still in the building. Regulations are emerging in Europe. In Singapore, for example, MAS recently updated its Payment Service Acts to include what they call digital payment tokens or digital payment tokens, CSDPT. So the regulation is evolving, but as an industry, we don't want to wait for all regulations to be put in place. And this group, the Global Digital Finance, have been meeting on a regular basis last year to establish code of conducts for the industry to ensure it behaves itself properly vis-a-vis its customers. So we've built that last year, and now it's a draft that is available on gdf.io. It's out for public consultation until the end of this month, and then it will become a code of conduct that Onchain Custodian and others will be able to adhere to. And when you look at the people in this working group, it's pretty interesting because there are not only custodians like Onchain Custodian or Coinbase Custody or Crypto Storage, for example. There are also technology providers like Securosis, who builds HSMs that are supporting cryptocurrencies. Also Ledger, who's providing hardware devices as well as vault solutions for custodians like us, if you want to use. And you also have traditional banks or traditional custodians like DBS, HSBC, Standard Chartered Bank, or BNP Paribas. And that demonstrates that digital assets is not something for the geeks or a topic for dreamers who believe in what I mentioned earlier, that everything will be tokenized in 5 to 10 years. It's also a topic of interest for traditional banks who also have that belief, who cannot be as public as we are about it, but who are getting prepared to ensure that they can still be relevant when everything, or most of the value, is digitized and tokenized and exchangeable on blockchain. I wanted also to mention the fact that as any new industry, there are some standardization challenges. So interoperability between blockchains is a challenge. Some blockchains are working together to meet and beat that challenge. Semantics is also a problem. People can't really agree on how those things should be called. Are we talking about crypto assets, digital token, crypto tokens? Anyway, you know what I mean. It's a complicated world where there's still a lot of different terminology for the same thing. And there are various groups at ISO level, but also at other industry group level, looking at semantics and how the terminology around blockchain and digital assets should be harmonized as much as possible. And it's also important for regulators, by the way, who are looking for common terminology to ensure that they're talking and speaking about the same thing with their regulatee and also with their friends in other markets. And when you look at the way tokens are identified today, and you have a table there, it's also a little bit of a mess in the sense that there is no standard about it. Most tokens will be identified by a ticker, like BTC, but BTC is also known as XBT on some platforms. So it just demonstrates that the same object is sometimes represented by different identifier. And there are some standardization initiatives. These are the ones that, as Onchain Custodian and myself, I'm participating to. So we have a GDF, as I mentioned, working on code of conducts and other best practices, but also working with the support of Swift on ISO 222 APIs for token transfers that, for example, an asset manager or a fund or an exchange can use to communicate with a custodian in a standardized way. The same way that in the traditional industry, standards exist to ensure that an asset manager can talk to multiple banks using the same language. We also have some standards around in ISO around digital token identifiers. So I'm convening the ISO TC68 SC8 Working Group 3, apologize for the jargon, which in fact is a standards working group looking at digital token identifiers. So how to create a string of characters and numbers that will uniquely, with a set of reference data, technical reference data, will uniquely identify Bitcoin, will uniquely identify a securities token on a specific blockchain, and so on and so forth. And of course, this is done in collaboration with other working group, looking at other identifiers like ISIN, for example, for securities. The BSI, the British Standardization Institute, is also looking at securities token classification standards that they will soon release for public consultation. And last but not least, to come back to regulation and AML and CFT requirements, the FATF, which is the Financial Actions Task Force around AML, around money laundering and financial terrorism, has issued in June last year recommendations that includes cryptocurrencies and other digital assets as part of the flows of transactions that should be monitored. And one of the requirements or recommendations is that the beneficiary and ordering customer information be transmitted between virtual asset service providers, so exchanges and custodians, or custodians to custodians, exchanges to exchanges, to ensure that if there is a need for a police investigation based on an AML or a CFT, so money laundering or financial terrorism suspicion, these transactions can be properly examined and properly investigated. The Joint Working Group for Intervas Messaging Standard is looking at data standards to ensure that every VASP around the world and every solution provider building solutions for the travel rule will be using the same data, either to exchange between VASPs or to make available to VASPs in central or decentralized, in a central or decentralized way. This initiative is sponsored by the Chamber of Digital Commerce, GDF, and IDAXA. So as you can see, quite a lot of room for digital asset for the third-party digital asset custody industry. Lots of work, lots of working group looking at building common standards and common best practices around this activity. You've seen also the technology that are being put in place to ensure that institutional players as well as investors, retail investors, can secure their assets with digital assets custodian. And I will now talk a little bit about Onchain Custodian and what we do in this space. So we've been created and founded in 2018 at the initiative of Da Hongfei, who is the founder of NEO. You probably know NEO is the first Chinese-based blockchain and now became international. It's one of the top 20 cryptocurrencies globally. And Da Hongfei, who's also believing in the long-term sustainability of this industry, has launched the concept of creating a digital asset custodian, on-chain custodian, that would focus on Asia-Pacific institutional players and high net worth individuals to start with. He engaged and worked with myself, Raymond, and Elle to be his co-founders and build a team from scratch, build a technology from scratch, and so on and so forth. We have great stakeholders. I'll mention that early on, but we have Sequoia Capital, DHVC, and Fosun as backers, and who participated to our seeds and Series A funding. We have strong partnerships with IBM for part of our technology that we are using. I'll explain that a bit more in detail later. We also insured, so we have an insurance covering the assets under custody that we have by Lloyd's underwriters and the support of Lockton as an insurance broker. We have the best partners in, we believe, for regulation and compliance, Acuity for KYC. Acuity is used by many banks around the world to identify customers and make sure that these customers are not on sanctions list. We're using the same banking technology. Merkle Science is a monitoring tool that helps monitor blockchain transactions and know whether there is any risks associated with those transactions. And risks, we mean in the crypto world, whether the crypto that we are receiving in our custody wallets have not come from a wallet, for example, that has been used to hack an exchange or that has been used to scam investors in China or in US or in Europe. So very strong tools that helps us make sure that we are in compliance with AML and KYC requirements. We also have legal partners such as Linklaters, for example, who are helping us in our license applications for the new Payment Service Act. We are currently applying for it, and as a few other players in the crypto space in Singapore, we currently license exempt, waiting for our applications to be reviewed by MAS. As I mentioned, many corporate memberships, not only GDF or ISO, but also industry groups in Singapore like Access or the Singapore FinTech Association. We strongly believe, as I mentioned early on, in collaboration, in building the pie and growing the pie together before competing for the pieces of the pie. This industry is still very small comparatively to other types of industries, and we need to build it together to make it successful. Cherry of the cake on the cake for on this slide. Last year we won the first prize, FinTech Award, Singapore Founder category, a prize that is distributed by MAS and ABS during the Singapore FinTech Festival. It's the first time that a crypto-focused company, a digital asset-focused company, wins that first prize, FinTech Award. Another signal, in our view, that Singapore is definitely looking to become a hub, if not the global hub for digital assets and cryptocurrencies on the long run. So this is a bit of our history. I will not go through the entire timeline because I mentioned most of what is on this timeline. What is interesting to share beyond what I've already talked about is the IBM collaboration that we started in October last year, which enabled us to build our version 2, the version 2 of our platform, which went live in February this year. And I will go into describing what this platform is doing in next. So as I shared early on, the demand for third-party custody is around security on the left, but also incremental roles or additional roles that custodians can do around transaction management, lending and borrowing, so providing open finance or financial services to their customers, either delivered themselves or delivered through partners. We've built, in our view, the best platform to do that, to bring convenience, compliance, and standardization, as well as security to our industry and to our customers. Our platform is very agile in the sense that we can enhance it relatively quickly to onboard new tokens, to offer new functionalities, to adapt it to the needs of our customers. And I will share a bit the type of customers we have. The type of customers we're working with are crypto brokers or brokers active trading traders of cryptocurrencies on exchanges, miners, projects as well, so token projects who have issued tokens to raise capital or have a token that they use as part of their solution to exchange value between their customers. Other types of corporates, of course, funds and asset managers, crypto exchanges, family offices, and high net worth individuals. We also have actually trustees who are more traditional players who wants to be able to offer to their customers the ability to host and to hold digital assets and don't have the know-how or the technology to do that. So in that context, we are acting as a sub-custodian to those trustees and helping them better serve their customers. And of course, we anticipate that other FIs, being traditional asset managers or private banks and others, will come on board as well as we grow, as our track record is getting better and better, and our reputation is increasing in the market. The type of service we offer are warm wallets and cold wallets. What is the difference? Cold wallets is for customers who don't need to actively trade or transact their digital assets. They would be stored in a air-gapped hardware, multi-sig hardware, multiple hardware devices, stored into safes, and they only extracted from those biometric safes when they are needed for signing transactions. So typically signing of a transaction with a cold wallet would take, if we are generally around 30 minutes to 1 hour. So it's not something that an exchange would be using, for example, to do as a wallet solution, or that a fund or an active trader would be using. They would be more using the warm and HD wallet solution that we've built with IBM to do that, because it enables for a automated, with the right threshold risk management features, but also and risk controls. It allows for a level of automation of transaction signing that cold wallet does not allow. That would be used for day-to-day transactions. Both solutions are insured by our insurance companies. That's important to mention. And on top of our wallet services, we offer what we call open finance services. So we have partners, and I'm going to show that immediately, open finance partners that we trust to deliver to our customers the best service they can to enable our customers to earn a yield, an interest, or to deploy their coins into investment products. And the reason why we don't do that ourselves is because we strongly believe in focus. We are strong and good and excellent at custody. This is our focus. This is where we spend our money, our energy, our human resources, our brain, and that's why we're very good at it. We don't think that if we disperse ourselves in doing everything else, like sometimes some custodians or competitors would be doing, that we will be able to offer the proper service to our customers. So the way we handle it is that we focus on our core, and then we select curated partners who will help us deploy the assets of our customers if they want to lend them, if they want to invest them into investment products, like with Alpha One, for example, if they need to ramp off their cryptocurrencies and need fiat currency, and so on and so forth. As we grow and as we build our platform, version 3, version 4, more partners and more integrated partners will be added on top of our solution to make it, to increase the offering to our customers and offer the promised single window access that we are selling, not only to the digital assets they have, but also to open finance services that they can use on top of custody with our partners. Our platform is very user-friendly. That's what our customers are telling us. Very clear, easy to use. That's fine, but the most important part, obviously, is that it's institutional grade built. All our code are audited by NCC Group, which is a cybersecurity auditor who audits every single time we have a major upgrade to our platform. We have penetration tests organized by another third party who is checking that on a cybersecurity point of view, everything is in place. And we've built all the right technological and operational environment to ensure that there is no weaknesses in accessing our platform that would lead to a hack or that would lead to losing assets or simply the platform being down. We offer both co-managed and full custody on the cold storage side, meaning that our customers have the choice to either participate to the signing process, the multi-sig signing process, or they will delegate everything to us. Most of the customers are outsourcing doing full custody with us. They only need to connect to our user interface, authenticate themselves, multiple level of authorization of verifying and authorizing transactions, and then we take care of the signing of the transaction in a multi-sig environment, 2 out of 3 or 4 out of 5, for example, depending on the setup of the customer. And our HD and warm wallets. So HD is a type of wallet that can be used to receive deposits, for example, for many different types of customers, and then being able to manage those deposits centrally by an exchange, for example. This would be dedicated to exchanges or platforms that needs to manage a lot of wallets and connect accounts, so client accounts to underlying wallets. Instead of having to build the infrastructure, the exchanges or the projects can outsource it completely to us. Our wallet solution is secured by IBM HSMs that are FIPS level 4 certified, which are the best in the world. Even banks don't have HSM level 4 certified HSMs. Generally, it stops at level 3, and that's the requirements of regulators. We go an extra mile because we're talking about cryptocurrencies and digital assets, and because we want to be safe in the environment that we operate. And we look at this IBM, different level of certifications of HSMs. You can see that we're using the best on the market to ensure, again, that all are not only private keys, giving access to digital assets, but also master keys, encrypting the operating environment are secure in the best-in-class HSMs, hardware secure modules that are out there. And let me finish by the key reasons why our clients are choosing Onchain Custodian. They like our consultative approach. We listen to them, we adapt our technology, our user interface, the coins we support to make sure that we can offer effectively the single window access that we are advertising. We have proven know-how and technology capabilities. We're working with the best technology providers, IBM, who are mentioned before, no need to present them, Onchain, a Shanghai-based technology solution provider who's been building blockchain solutions for the last 5 years in many sectors. Our assets under custody are insured, and the management is highly experienced. The C-levels are coming from the best companies, BNY Mellon, Swift, CIMBC, JP Morgan, KPMG. So experience that is going across technology, banking, and capital market. The team has also this mix of various experience and also various origins, which makes our company stronger. Finally, we are backed by credible institutional shareholders, which proves that we are here for the long run. We will build this company and grow it with our customers as the interest for digital assets grow in the institutional and retail space. If you have any questions on this presentation or our Onchain Custodian, please contact us at contact@oncustodian.com. You can also find us obviously on our website, oncustodian.com, where you will find all the necessary information about our partners, our services, and a way to contact us. We also have a news blog on Medium, medium_oncustodian or Onchain Custodian, where we post on a regular basis news, opinions, and information about the services that we are rolling out. Thank you very much for your attendance. Have a great week and keep safe.